Hello, everyone, and welcome to Forte Financial Mortgage Group's podcast. This week, we have a very special guest. Everyone meet Karen Mulreed. Karen is a loan officer who we recently joined forces, formerly Westport Mortgage, and we're super excited to have her on board. We have a great podcast for you. This week, specifically, we're going to be talking about how to compete with cash buyers for borrowers who are getting mortgages. Karen has been in this business as long as I have, and longer probably. But it's pretty exciting to have her part of the group, and she's going to introduce herself as well and tell everyone a little bit more about some of the benefits and why we joined forces.
Since 1997, I've been in the mortgage business. February 14th, actually, 1997. A very exciting time for me. And now I feel like we're taking the next step in a great adventure with you and Forte Financial. I think we're stronger together than we were separately. We've got more lenders, more options, and a great presentation for realtors and buyers to take their next home buyer journey.
Absolutely. Yeah, it's been exciting. So yeah, 1998. So she's got me beat by a year.
And it is a journey, and it is confusing, and we are here to make it simple.
Awesome. Yeah. All right. So very exciting. Again, this is a big topic right now that, especially in the area we're in, mainly in the Fairfield County area in Connecticut, New York, Westchester, the tri-state area, we're seeing a lot of issues where buyers are competing with cash offers. They're trying to get their offers accepted. They're putting in offers over asking prices. They're not getting their offers accepted because cash buyers. So we're going to talk about, we have 14 little tools that you can use to position yourself better if you are a buyer that needs a mortgage, and to help you put you in a better position to compete with that, because cash buyers aren't always better in a lot of cases. So let's talk about the first one, Karen, offering more money. Okay, some of this stuff is basic, but
right.
Let's talk through it.
I've seen people offer as little as $5,000 more, or $1,000 more, or $300,000 more, and they did get the property. But I mean, that's a simple suggestion, but it does work. The asking price is just what that is. It's a place to start. It's not where you're necessarily going to end up.
Yeah, I think a lot of people worry, oh, well, I'm paying too much. But at the end of the day, if you're paying $5,000 or $10,000 more for a house that you really want, I think the question to ask yourself is, if you know you're going to lose the house over that money, that $10,000, are you happy about that decision? Lots of times people will say, I wish I would have just put another $5,000 in, right?
Well, that brings to mind the escalation clause. And some agents like them and some don't. Yeah. And your agent, your buyer's agent can talk to the selling agent to see if that's, appropriate in this case. Of course, all offers have to be presented. But, the escalation clause, how do you determine how much that is? I think you have to think about, at what point would you be upset if you didn't get the house? So, if it's $1,000 more, $10,000, $25,000, maybe at $50,000 or $100,000, you say, they can have the house. I don't care. And it doesn't bother you. So you don't have that emotional attachment at that point.
Let's explain to the viewers what exactly is an escalation clause. How does that work, right? Do you want to take that?
Sure. An escalation clause means that you're going to present the offer that you will go over and above the highest offer that you can prove that was given to the seller. So if you've offered, if somebody's offering $900, if you can say, I'll offer $905, I'll offer $950, I'll offer $1 million.
Yeah, a lot of people don't use that, and I feel like it's a really good tool to protect yourself in not losing out, but knowing that you're willing to go above within a certain amount.
Right. And you can do that at $300,000.
Yeah.
I said 9, but
sure,
you can do it at $300,000 at any price point. It's a good tool. It sets your offer. It highlights your offer from the others.
Yeah. And just a disclaimer here, we are having some construction in the studio, so apologies if there's a little outside noise of construction equipment going off. So Apologies for that in advance. That's what's going on here. I mean, we have our list here, but one of the things that I really want to talk about, because I want people to really see the value here. When people I want to go right to waiving a mortgage contingency. Let's do that one next. All right.
Okay.
Because lots of times, and I have an example I'll go over, which just happened this week with a buyer. They're saying, oh, well, my realtor is suggesting that I, as an option here. And first of all, let's just say we're not recommending anybody do any of these 14 things. We're just giving you these tools if you want to use them. We have personally both been successful using some of these tools in our own personal transactions. Right. And also our other borrowers have used some of this stuff and has helped them win houses. So one big thing is waiving a mortgage contingency. And, for somebody who needs to get a mortgage in order to buy the house, waiving a mortgage contingency can be very scary, because what that means is if you don't get your mortgage and you can't close, whatever down payment you've given, you would most likely forfeit that down payment in that case. So it's a risky move, but we have a couple of ways that we can combat that.
And please consult with your attorney before
100%.
Before you do anything, that we're going to talk about, get the perspective of your realtor, get the perspective of your attorney.
Yeah, 100%. So one of the things I like to talk, one of the things that we promote on our show in terms of what we do in terms of lending is our mortgage process can be truly, in most cases, it depends on the program, but for the majority of our loans, our conventional, if this is a traditional conventional type of loan, we can issue a loan commitment in literally a few hours of when we have everything we've requested from the borrower. They've e-signed disclosures. They've given us all of their income, assets, credit documents, and we submit it to underwriting. We can have a loan commitment in a few hours. So the point here is if we are actually issuing a loan commitment that quickly, you have a window between when you have your offer accepted and a contract. I want Karen to explain that time frame and how that piece works and how we can use our speed to,
And just getting back to basics, the most important piece is to get pre-approved. Really, don't decide this morning that you're going to buy a house and then this afternoon put in an offer and you might laugh, but that has happened many times. And, those buyers they're not armed with enough information. They really need to be knowledgeable about what they're going to do. They need to know that they have the money for down payment. They need to know that they can afford that monthly payment, whatever it is, along with any other, monthly responsibilities that they have. So getting pre-approved and I mean, know what your purchase power is and know what your limitations are, and don't look at homes that are over and above that.
Yeah, no, that's a good point. That's a good point.
That's the key. If you can afford a $600,000 home, well, then don't look at $1 million home because, bigger always looks better.
For sure. But just as far as that one piece with the waiving the mortgage contingency, typically it's usually somewhere around 7 to 10 days between when you get an accepted offer that's signed in Connecticut. We're talking at least here in Connecticut, for example. All right, because every state is a little different, obviously. But in Connecticut, there is the offer to purchase that is typically signed initially, that is agreed on between the buyer and the seller. And then there's an attorney review period, which is usually somewhere between 7 and 10 days. We've seen it take 15 days. In that time frame, we can start processing your mortgage. We can use that offer to purchase as the contract and move your file through underwriting. So in that 7 to 10 days, we can literally have you clear to close, at least 99% of your loan conditions cleared. So, if you chose to waive a mortgage contingency, and let's say there was a problem in the underwriting process, which that's not going to happen with us if you've been pre-approved because we do our due diligence.
Right.
But point being, if there was, you can back out of that deal before you sign the actual contract with your attorney. The offer to purchase is not actually binding. So that's a really cool creative tool for people.
Absolutely. And just be sure that what you're signing is not a contract, so that you have that opportunity. Of course, we don't want that. Nobody wants that. And we, as a buyer, you get all excited and you're invested in the transaction from day one.
Yeah.
And you've made an offer to the seller, they've accepted, and you have a deal. So of course we want it to go through.
Yeah, it's again, this is I can't stand how it is now. I really dislike how everything is over asking price and multiple offers and the stress and waive this, waive that, waive this. We're just trying to educate potential homeowners here, buyers, on what they can do. Some extra tools, what's in the tool bag. And it may not be evident, the stuff we're talking about. So we want to express some of that. So let's talk about home inspections.
Home
right?
inspections. You can waive your home inspection. I mean, you can do one before you even place the offer. You can do a pre-home inspection where they just look at the bigger ticket items to see if there's anything wrong, and that takes about an hour or so. And you could bring somebody in on Sunday or Monday before you put your offer in. If the deadline happens to be Monday at 5:00. So that's a good tool. You pay a little extra for that, but I think it's well worth your peace of mind.
Absolutely. And one more thing there too is, if let's just say you're not able to do that, and you got your offer, you're going to get your offer accepted, you think, and they say, oh well, if you waive your home inspection, we'll accept your offer. You can still waive your home inspection, but do an inspection which is for informational purposes only. That basically what that means is if you have an offer that's you've waived your inspections, but you do one for an informational purpose only, and you find issues, you can't technically back out of the contract because of those things, right? However, this also kind of falls in that attorney review period that we're talking about in most cases. Obviously, check with your, like Karen. I assume everyone is understands what we're talking about, but check with your attorney, make sure you are in that attorney review period before you do anything like this. But you can have your home inspection done that is informational purposes only. And if you don't like something, until that contract's signed, in most cases, you're not going to have any issue if you wanted to back out at that point. And
it's especially attractive if the home happens to be newer, if it's new construction, or if it's just new-ish, or if it's a condo where you don't, anticipate any kind of, big ticket issues. Or you can even just focus your inspection items on, let the seller know that you're not going to nickel and dime them on every little thing. It has a cracked window. We don't want to focus on those things, but you can put a dollar limit. I'm not going to discuss anything unless it's, a cost of $5,000 or $10,000. And, that puts the seller's mind at ease. Just switch places and see how you would feel. And if you know that it's only big ticket items, you're not nickel and diming, people are more open to it. So that really
leads into having a conversation. One of our pieces here is building rapport and talking to the listing agent, things like that. So let's go over that one. Talking to the listing agent. Tell them what they can do.
We, as mortgage professionals, can talk to the listing agent and the seller and tell them what a great buyer we have, and that we've been working with them for a while, and we've looked at their income, savings, credit, and debt. That they're good to go and they're strong and they can close quickly. And volunteering that information and just showing transparency and good communication goes a long way. Especially when somebody doesn't have to ask and you're volunteering. You don't volunteer unless you have really good news, typically.
No, absolutely. And that's another good point as far as what the listing agent goes. And I want to bring that up. I mean, Karen has an incredible reputation in our, in Connecticut here in terms of with realtors. So everyone, for the most part, in our area knows who she is. And when they see that it's her doing the mortgage, they're going to have a comfort level. So the point being here is who you're dealing with too. If they have a really good reputation in the area and they have, good relationships with a lot of agents, that's also going to help you, when they call and talk to the listing agent to put them at ease. Now, no information is going to be discussed with the listing agent that you as the buyer don't want them to know, or they don't. We're not going to share any specific details or any personal financials aside from reassuring them that we have reviewed your income, we have reviewed your assets, your credit is excellent, and you're not a complicated borrower, and we anticipate no issues. And hey, we're going to get a loan commitment really fast. So there's just things like that we can reassure the seller side that if somebody isn't doing that it puts you in a much better position. Right.
And this is when local really matters, because on Saturday afternoon or Sunday afternoon or any afternoon, you can give us a call, and the selling agent and the listing agent and the buyer's agent can speak with us, and we can give them that comfort level. And when your buyer's agent lets the listing agent know that they've worked with us before and they can trust us and we are reputable, and they should feel confident. It goes a long way in establishing the relationship between the buyer's agent and the selling agent, which is really, really important. Everybody likes to work with someone that they know and trust.
Absolutely.
And this is no different. So and it's a small community, but everybody gets to know each other.
It is. We do also. We have a lot of. I mean, we've seen. Oh well, this buyer has a mortgage company we don't know, or they're from some bank we've never heard of before. They don't like that. So I mean, it's an important thing who you're dealing with. That it's one of those things. Though, you don't want to force somebody to use a certain lender or but if it gives a comfort level to other people, it may make the difference between you getting a deal or not. Right?
Yeah. I mean, local doesn't mean small, and it means small in the fact that you're here in the community and you live and work in the community. But, today we have the technology of, really big companies, and it makes it so much easier because everything is done electronically. I
mean, absolutely. One of the things, if viewers that have followed our podcast, we talk about is how, hey, we might be a smaller lender, than a bank or a huge nationwide lender, but when you compare our terms, apples to apples, our turn time, our technology, our speed, I mean, we're winning on every one of those fronts 99% of the time against our bigger competitors. So being smaller doesn't mean, we're worse. We can actually do better.
Even the products. I mean, we have products of 25 lenders where you go to your local bank and you have the products of one.
Yeah. No, we get real creative. And we'll do some more of that. We need some new content on newer products and newer things that we'll do another podcast on that one separately. As far as this, one of the tools here is people waiving not necessarily their mortgage, but an appraisal, because a big concern lots of times with people putting over asking numbers is the appraisal. What if it doesn't appraise? So let's talk about the appraisal gap coverage or waiving an appraisal. Tell them about that, Karen.
That is a conversation that we have from day one. Mm-hmm. No, and even when you don't have a house in mind, we want to know how, what exactly is your purchasing power? How much can you put down? Do you need to put down less? With an appraisal gap, say the house appraises for $600,000, but you've offered $7,000. So how do you bridge the gap between 6 and 7, right? Because the lender is going to lend to you based on the appraised value or purchase price, whichever is lower. So how do we bridge that $100,000? Do we get more financing? So maybe we put 5% or 10% down. Do we get a gift? Do we go into savings? What do we do to bridge that gap? And it's important that the seller know that you can achieve that goal because they already know that you're offering more. And remember, appraisals are a look backwards in time, not forwards. So they're taking what has previously closed in a short period of time at homes that look just like yours and have the same style, the same square footage, the same amenities. So it's a look back in time. So in this market, housing prices are higher, and they're going up every month.
They really are. It's nuts.
So the appraisals that you're going to see, they do account for that, the market that we're in, but it may not truly reflect where it is today as opposed to where it was even, a month ago.
Absolutely. That's a good point too. Our appraisal management companies that we work with are, they're appraisers in the area that are, we're not sending somebody from, 3 hours away to come to Ridgefield, Connecticut, for example, to do an appraisal. Like you're going to get a very fair assessment. And
it's where local matters.
yeah. And there's a lot, like I said, Karen brings up a good point, that if it, with regard to, well, how are you going to bridge that gap if it comes in short? And letting them know, hey, even if it comes in $100,000 less, we're still buying it. And here's how, and having that conversation up front as well, will make a seller more comfortable in a situation where they know that potentially there could be an appraised value issue. I'll be honest with you though, we have, in the last, at least myself, I can speak for myself, in the last 3 or 4 years since we've been in this crazy, growth and high values, I barely have had any loans, appraisals have come in less than the purchase price. There's been a fraction, and the few that haven't, they were close. It wasn't a huge deal. So I'm not running into that personally. I don't know about you, Karen, but I haven't really ran into that much.
Occasionally I will, but I always advise, and most realtors already know, bring comps. Mm-hmm. The appraiser doesn't necessarily have to accept them, but it's good to give anybody a head start with the work that they have to do. And it doesn't hurt to bring comps to show that, here's the reasons why these comps may value more. And here's comps that might be less. And here's, why these are good comparables. I think that's really important.
Yeah, yeah. One of the things that I want to talk about is, a cash offer, okay? Cash offers are not as great as everyone makes them out to be. If I personally have been on the selling side of my house, my last house that I sold and bought a few years ago, we had multiple offers on my house, and one of them was a cash offer. And to be honest with you, that doesn't mean that it wasn't the strongest offer, because a cash offer is, they still had all these other terms that, well, we want to close in 2 months from now, or this or that. It doesn't really matter to me. If there's someone that's going to close, it still takes a few weeks for the title to get done. There's a lot of things that have to happen. So it's not just like, if you have a cash offer, you're the best. There's a lot of things to weigh out. Like, for example, one of the things on our list, Karen, is rent backs, or what you can offer to the seller. Why don't you talk about some of those things?
I think just being flexible and knowing that you're working with the seller. You're not, you're on opposite sides. Of course, you want to buy what they're offering, but it's a great opportunity to work together and to be flexible and not just stand ground because, I want to close on this date. You're dealing with people with lives and kids and work and responsibilities. And being flexible helps make it easier for both sides. It's an emotional time for the seller because they're moving out of a place that they've, probably have a long history with. And it's an exciting time for you as a buyer because you're starting your new, dream house journey. So, being flexible about closing, being flexible about when they can move in. What if the seller needs a little time? Even though they want to close quickly, everybody wants to close quickly, but maybe the house that they're buying, they're going through the same situation with their seller. So if they need to stay, maybe renting back to them is a great solution. You as the buyer get to lock in your rate and close, and you get to start paying your new mortgage, which is always exciting, right? And and then the seller still gets to stay there if that's what you need. Or just be creative in what you might offer. Maybe paying for their closing costs might set your offer apart. Maybe offering them, a cleaning service for some time while they're in their new house. Maybe offering, what did we talk about before? A pizza on Friday nights.
Pizza every Friday night for a year.
Right.
That's cool.
It's very cool. And, some of these are smaller ticket items, but they are very impactful. And I think you just want to do everything you can to set your offer apart so that you shine.
And little stuff like that, like you said, it's a smaller ticket item on the grand scheme of things.
It's
but
cute.
It's really cute, and it's very like thoughtful. It's very thoughtful.
Right.
Like anyone, if someone said to me, "Hey, we'll buy your family pizza for a year every Friday night," like
It's kind of cool.
I'm gonna stop for a minute and be like, cool.
Right.
Wow. Like it's not going to start register in my head the dollar amount. What does that equate to? Versus, oh, well, we'll give you $5,000. Like I'm going to listen more to the pizza every Friday night because it's thoughtful. It's cool. You know what I mean?
It is.
I like that.
And it's very real.
Yeah. No, that's basically just be different, be creative. You know, obviously, this is also where having a really good agent on your side to help you be creative is important, right, Karen?
Right, and even having your agent just call your agent calling the seller's agent, developing that rapport, but asking them questions. You never know what you're going to find out. People are very chit-chatty and want to talk about their listing and what's important to their sellers because, remember, they're representing their seller. They want the best for them. So that they can convey to you what the seller wants and you can give that back, it sets your offer apart. And it draws the eyes of your seller to that offer because it meets all their qualifications.
So just not to bounce back and forth, but one piece that we didn't touch on with regard to the waiving of the mortgage contingency and the speed and all of that. One thing that we recommend highly is to have all of your documents, everything that we're going to need to close your loan, have that and as up to date as possible to your lender, us, whoever it is, and have that all in and ready to go. Because when you do get your offer accepted, on our end, we have that in our hand, that assigned offer. It's just click, click, click. Within the same 24 hours, we can, Karen can send you your loan disclosures. Right. You'll e-sign it. Once that comes back, all of that immediately electronically is submit directly into underwriting. And in that same day, we can actually have a conditional loan commitment. And we'll know, too, at that time, if we're even going to need that appraisal. Right, Karen?
Right.
Talk about appraisal waivers.
Right. You might get an appraisal waiver. We submit your loan file into the automated underwriting system. That automated underwriting system will come back with the approval decision and also let you know what you need. You need one pay stub. You need two pay stubs. You need tax returns. But maybe you don't need an appraisal. And we can actually run that in advance of. So if you're going to make an offer this weekend and your agent knows, I think they're really going to love this property, we can run that property through the automated underwriting system and know ahead of time whether or not we're going to get an appraisal waiver or not. And then we can convey that information to the listing agent, which again sets your offer apart because you've done your due diligence and it shows real interest in the home.
That is powerful. Also something else that we deal with a lot with these competing with cash offers are mostly for, and a lot of this is for investors too, where, a lot of investors want to buy houses, fix them and flip them, or buy them, fix them and rent them, but the house is not like a habitable condition, so they think they can't get a mortgage, right? So we have some very unique construction programs for investors that if they want to buy, fix, flip, that we can do this and get a loan done and closed under one of our specific programs in 2 weeks. We do this a lot, which would be just as fast as if somebody was paying cash and has a cash offer. So if you're an investor looking to buy, fix, flip, buy, fix, rent, and you don't have a stockpile of cash, you can compete with investors. You can compete. We can do a loan, which includes the cost to renovate the property. And, there's really no income verification either on these types of loans because they're for investors and it's all about the property and that cash flow and what that looks like. So that's another thing that is huge with cash offers is investment properties and houses that are not in livable condition. We got you covered there. So,
and with any purchase that you're making, any big ticket purchase, I don't care if it's a $200,000 condo or a $10 million home. Don't after you apply for a mortgage, don't apply for additional credit. Don't move money around without telling us about it. Don't quit your job. Don't retire. Don't buy really big ticket items. Don't go on vacation. I have a list of do's and don'ts that I'm going to send out to everyone because you would be surprised at what what happens in your life as soon as you decide you're going to buy a home. All of a sudden, now the vacation comes up, and maybe you can spend that money and increase your debt ratio, and maybe you can't. And you need to know and make that a really informed decision.
It's also a good idea to be around in the mortgage process. So if we do need something from you, you're not off on an island with, limited cell and Wi-Fi service. So
But everything is accessible to us now, no matter where we are in the world. So don't let that stop you. You can reach your bank statement from anywhere. You can get a pay stub from anywhere. But open communication and just being prepared and saving those bank statements that you're getting, online, keeping those pay stubs available. It's a huge help.
Absolutely.
Because it's a frenzy once you find a house.
Well,
you're getting ready to move.
We can talk. Why don't we talk a little bit about some of those do's and don'ts? Because we have covered the basic tools here that we've utilized. Unless you want to talk a little bit more about some specific examples and what people did specifically. Do you have any examples you want to go over?
I had someone, I guess last year, retire before closing. They didn't have a job anymore. The money that we documented as income every month was no longer there. Now, it so happened that Social Security that they had decided to take was going to cover it, but there was every chance that it wouldn't. And we just want to be careful. Anything financial that you decide to do during the loan process is something that you need to discuss with us because there's a right and a wrong way to do it. Even gift funds, there's a right and a wrong way to transfer gift funds, and not everybody knows that. I had a client in South America who wanted to bring money over in a suitcase. Now, you laugh, but there were big fees associated with transferring the money any other way. They didn't see anything wrong with that. We just happened to be having a discussion, and that's what she told me she was going to do. And we had to stop that because you can't document cash.
Absolutely.
So, those little things that, somebody who's not in the mortgage industry is going to think, this is logical. This is my money. We sold a house in South America. Why couldn't I use the cash? Cash is king. Well, in this case, cash wasn't king.
Do's and don'ts. Like this is we'll do a whole nother podcast, do's and don'ts.
On
but
do's and don'ts.
let's touch on some of them right now since we're here and we're talking about getting offers. The one example that I wanted to give was we kind of touched on it a little bit, but we had a buyer this week who he said, James, my realtor suggested I waive my mortgage contingency. Are you all set? Are you good? And I said, we're good. I can't guarantee you a mortgage until you're actually clear to close and you're closing. But at the same time, what I can do for you is we can run this whole thing. You can give me every single up-to-date piece I need. I can submit it. I can get your disclosures to you and your loan commitment that day. That will be subject to only the appraisal, your homeowner's insurance, the title insurance from your attorney, and fully executed contract. I can make it subject to only those things.
Right.
And that well before you're going to even sign your contract. So, waiving a mortgage contingency, I don't recommend anyone do. Like Karen, you brought up a good point when we were talking about this, preparing for this podcast, is somebody could be cleared to close, get their loan cleared, pass everything. Within, typically it's 3 days of closing. Right. We're going to do a verification of employment within 3 days. It's usually 3, sometimes maybe 5 or 6, but it's typically within 3 and sometimes a day before. And that's done purposeful to make sure you're still employed when we give you the loan. It's not like somebody's waiting until the last minute. That is the point of it. And, if you lose your job or you quit, at the end, even though your loan was clear to close, that clear to close is subject to that final verification of employment.
Every time.
Keep that in mind. That's why we don't like anyone waiving their mortgage contingency. Both Karen and I have done it personally.
I know we have. I did it twice.
I did it twice also. and I hated doing it. And I do this for a living and I hated it. But I did it. And, it's something that if you're going to do, we're not saying don't do it. Like we're not advising you to, and we're not telling you not to. But because if it can help you get a house that you really want, that you wouldn't get otherwise, we just want to give you the best tools in your toolkit to achieve that goal with the minimal downside. That's the point of this, is education.
Right. And it's a decision you really have to make for yourself, knowing what your current employment situation is.
Mm-hmm.
I knew nobody was going to fire me. I'm self-employed. So I wasn't going to fire myself. So I knew I had a job.
Yeah.
I didn't do anything to increase my credit limits, or I didn't increase my monthly charges on credit cards. We all charge on credit cards now, but we all have a pattern. So if we go over and above that, that's something the lender could look at beforehand. And they will look at it right after closing. So don't buy furniture or a new car a day or two after closing, because they will look to make sure that no new credit has been added and that you still have a job.
Yeah.
Because they've been burned before.
Yeah.
But,
sure.
It's the lender's responsibility up until the day of close to make sure that you're in a position to buy this home and take on this new credit.
Yeah.
And, as long as you prove that, what you decide to do later, is your business. I mean, certainly nobody's going to track what you're doing a month from now, but they have to be responsible. And, we do recommend responsible lending, always. It's something that we live by. And it's why 25 years later, we're still here.
Absolutely. Yeah, it's tough out there, guys. We know. We deal with it every day. We just want to help, give you solutions, right?
And we're always here for questions. Don't ever hesitate. There are no silly questions. You as a doctor or a nurse or a teacher, I couldn't do your job. So please, you wouldn't want me, sitting in front of your classroom, I guarantee it. But this, mortgages, we know. What you need for a loan, and always keep those documents on hand, because up until closing, because you never know when you're going to need to resend something didn't upload properly, something isn't clearly written.
Yeah. And let's just, since we've pretty much covered this and we have a little more time, let's talk about some of those, a little bit of the do's and don'ts now, and what to expect, right? What to expect. One thing we see a lot of is, especially with borrowers that are a little bit more complicated, right? Like we do a due diligence, of course, up front, where we get as much paperwork as we can, based on what type of loan it is and what your things are. But, once we get bank statements from you, and let's say we give you a list, we get your bank statements, it doesn't mean we're not going to come back to you and ask you for more stuff. The reason we're doing that is because something you gave us raised another question that we did not know until we saw that. And it's something that a lot of borrowers get frustrated. Oh, more paperwork. Well, we asked you for your bank statements, but when we got your bank statements, there were these deposits and transfers that we need to know what they are. And the reason why underwriting wants to know what they are is because they want to know, was this a loan that you took out? Are you liable now for another debt? Like, and
was it stolen? Was the money stolen? Was it drug money? We have to be
right?
We have to be legal about everything, and we have to paper trail anything that's, like I said, we always have a pattern of spending. So they're not going to look at that. But if you have, a recent $10,000 deposit and you don't normally have that, they're going to question. And they really have every right to do that, because it's on the lender right now to practice responsible lending so they can make sure you really can afford the home that you're looking to purchase and make that payment on every month.
Yeah, no, it's true. So, these are just some basic things, but the soft pulls, let's talk about the soft pulls right before closing. I know you touched on it about don't spend, but, we are going to check in most cases, do what's called a soft pull, which we usually do initially for our borrowers, when they're just doing a pre-approval
explain to them what a
stage.
soft pull is, because they might not know.
Excellent. So a soft pull is a credit inquiry that does not count as an actual inquiry on your credit. As if you guys have watched some of our other podcasts, we go into detail on how credit inquiries can affect your scores. And if not, check out our educational section on our website with our podcasts, and you can check that out. But basically, an inquiry, if you get a hard pull, your regular credit pull, it counts as an inquiry on your report. And depending on other factors, balances, how many other hard inquiries within a certain time period will determine how that inquiry affects your score. You could go down a couple of points from a hard inquiry, but again, that's not going to be the case unless there's other factors also, like high limit to credit ratios. I don't want to get into a credit
That's a whole nother
dissertation here.
podcast.
We had a whole podcast with our credit expert Noel
No.
last year,
Right.
and it was spectacular. But point being, we're going to do a soft pull, which doesn't count as a hit, doesn't count as an inquiry, so you don't have to worry about any of that. It doesn't show up if anyone else pulls your credit that we looked at it, but it enables us as a lender to see if you've opened up any other new debt before you close, and if you did, then we're going to have to ask you for that documentation to verify what that debt is, add it into your debt to income ratio, make sure everything is fine. So that's part of the thing we say, don't apply for other debts while you're doing this, or if you absolutely have to, just talk to us about what that looks like so we can prepare your file and make sure it's fine, and tell you exactly what to get us so there are no delays, and we can make that smooth for you.
Yeah, I mean, and you have to live your life.
Mm-hmm.
So if you need to, your lease is running out, you need to get another one. Well, that's fine. If you are going to buy a new car, that's fine.
Mm-hmm.
You can do whatever you want. It's just run it by us first so that we can tell you what the ramifications are of accessing new debt.
Absolutely.
Is it higher? Like if you have a $500 car payment and now you're going to have an $800 car payment, well, maybe that $300 impacts you. Maybe it doesn't.
Right. Well, and that's interesting because a lot of people, we have borrowers who have really low debt to income ratios that are stressed out that, oh my God, I can't pay more than X amount per month for the mortgage. And yet on paper, we're like, you could pay double that and we're fine. And then we have other borrowers who are like, oh, I want to spend $1 million. And we see their debt ratio on paper, like, this doesn't work, because everyone has different things going on. Like that person may have income, from another source that is not documentable, or
a spouse,
or a spouse.
It's not on the mortgage.
So it's always I don't like to assume somebody can or can't afford something. We just like to educate. This is what it looks like on paper. Here's your options. This is where you're at. So, definitely the point is, just because you think you're fine and you can afford it, it may not be the same on paper. So check with us first.
Absolutely. I mean, in a lot of positive ways.
Mm-hmm. Mm-hmm.
You just want to check any financial transaction that you're going to make, even moving money. It's not that you can't do it. There's just a right and a wrong way to do it. And why not make life easier for you and then for us as well, because we're going to deal with the lender and have to explain that. But it makes your life so much easier. You want that clear to close on your mortgage to come quickly. Believe me, I know. If you have alimony or child support or anything like that you pay, the lender has the right to see those, deposits or, outlays of funds. There's always little guidelines that go along with all of those little details. And they seem natural and normal to you because that's what you do in your life. But the lender doesn't know that. And we're there to put those numbers on paper into a nice picture that makes the lender feel comfortable about approving that loan.
Yeah, I know we talked about assets and transfers and deposits, but this is usually has been on purchases, in my opinion at least, the biggest frustration point for borrowers is one, if you're somebody who moves money around a lot, transfers, deposits, and you do a lot of that in your bank accounts, and it's not obvious what it is. Like, don't get me wrong, a direct payroll deposit into your account, we don't need any other documentation as long as it looks like that's what it is, because we also have your pay stubs, which are going to match. The net pay on your pay stub is going to match what went in anyway. We're not going to ask for anything else. But the reason we ask for that stuff isn't to give you a hard time. I know a lot of borrowers just don't get it because they don't do this for a living, and it makes sense. Like, well, you can see it's there. Why does it matter? Well, there's really two main reasons, which we went over, but I'll just make this clear. And one is, money laundering, the Patriot Act. Like that, this is one of the ways to prevent that. Is if we can show where money came from, then we can rule out that it was laundered. Also, we can rule out the fact that it's not a loan. Like if you see a deposit for $50,000 and we don't know where it is, how do we know you didn't just go to the bank and get a $50,000 loan that we're not debting you for? That's not in your credit report. So, getting that documentation to show where it came from rules all of those things out. So just understand it's not us giving you a hard time. It's not,
Never.
It's only, it's what makes these loans saleable and eligible. And that's all it is preventing those things. So I think, I know I like to explain that to borrowers personally.
Absolutely.
Because, I find borrowers are no longer frustrated by the request when they understand why you're asking for it. And that's lots of times I see people asking for, things, and borrowers, they asked for all these things, but they obviously they're frustrated because they don't know why they were asked.
No blood or firstborn, I can guarantee you that. We haven't been asked for that yet. It seems like it sometimes.
Lots of times it's, what do you want, my blood? Or, you get that comment, and it's funny. But
recently I've gotten that comment.
Yes.
But, I understand. And, I recently bought about 2.5 yeyears ago, bought and sold. I understand.
Mm-hmm.
I truly
both
understand.
do the same thing. Yeah.
It comes to heart.
I got stressed out. I bought, a bunch of homes at this point in my life, and I got stressed out the last time I bought a house. And I do this for a living. It's natural, So we get it. We try. That's why we really try to cover every base, explain what's completely relevant, and then any other questions you guys have, you ask us. We'll guide you all the way.
Right. And remember, talking to that seller, the selling agent and the buyer's agent is key. And getting us involved right up front is key.
100%.
It makes everyone feel more comfortable.
Mm-hmm.
I mean, I felt more comfortable when my buyer's mortgage lender called me and said, really, they're good to go. They got excellent credit, good income. They have the money to put down. They have the money for closing. They're good. And it does make a difference. And their offer sticks out.
It does.
And we're happy.
I don't have anything further I wanted to discuss here. Is there any closing comments, remarks, anything else you wanted to add to the podcast?
Just,
here?
Give us a call. There are no silly questions. Knowledge is power. And that knowledge will give you the information that you need to make the right decision for you and your family. And that's really what's important. It doesn't matter whether we tell you you can buy $1 million home or not. You have to be comfortable with that payment every month. Yeah. And as long as you are, and as long as the lender approves it, you're good to go. But if you don't want to spend that, that's fine too. We don't care about that. We care that you buy the house and are making the payment that's right for you and your family.
Absolutely. And if you're interested in learning more about our company or are educating yourselves on other topics such as credit, like we talked about, just there's so many things that we discuss: first-time buyers and special programs, self-employed individuals who don't show money on their tax returns, how we help them buy houses, all of that stuff. Right. We have our podcast and social media is available. Just head to our website at fortefinancial.com and click on the education link at the top of the page, and it'll bring you to all the podcasts. And you can follow us on our social media pages as well for some of our shorter informational clips. Right?
Call, email, text. Let us know that you like the information or what you want to learn more about.
All right. Awesome. This was excellent.
Great.
Thank you, Karen.
Thank you, James.
All right. We'll see you all soon.
Got a little